Good morning, everyone. Welcome to Diamond's Edge Live. And the name of the game this week on this show is patience. As I'll show you, in the rules of Elliott Wave, we've had a big five-wave move up, and that usually means that we have an ABC correction, a three-wave move correction. If you think about the lows from April, May, really, the breakout happened in May. When I talk about time analysis, Gann talks about things happening in threes, 3 weeks, 3 months, 3 years. So May, June, July, getting into August, we had a 3 month run up, and now we are likely to have a correction. What I'm going to go over is what we could look at. Is it going to be volatile or is it going to be kind of boring? Okay. So that to me means patience first. I will outline some of the future dates that we can look at, starting with August and going all the way out to October, and how I believe this is going to shake out. We'll look at gold and we'll look at interest rates. The Federal Reserve goes later today. Is that something that is going to be a catalyst for the market? I would think. Are they going to give in to the pressure of raising rates or, cutting rates, or are they going to remain on hold? We'll go over some of those scenarios. So let me share my screen. And I'm going to start with the global Dow, okay? And just show you here how we have, and this isn't even from the exact low. I just want to start from uh, this May low, and you can see 1, 2, 3, 4, 5. And now we've corrected, okay? You can see how we got into overbought territories on the RSI and composite index. You can look at the MACD, similar type situation. All right, so this is just very simple. 1, 2, 3, 4, 5. There it is. Okay, now we have this corrective phase. This is the global Dow. So this is the blue chip stocks around the world. All right, now but let's focus on the U.S. So let me show you, and I put this chart together ahead of time. This is the VTI, the Vanguard Total Stock Market Index. And basically, this is another way to look at all the stocks in the U.S. So take the S&P, Dow, Nasdaq, semiconductors, and you throw it all into one chart. And again, I'm just looking at this May five-wave move. All right, and there's a lot of things on here. I'm going to go over them specifically, show you exactly what I'm looking at. Okay, so in red, I have a wave count, and blue I have a wave count, and this is where Elliott wave comes in. This is where you have it's an art and a science, understanding what the market is telling you. Okay, I'll start with the red, which is 1, 2, 3, 4, 5, meaning we've already topped. Okay, and in red you can see here, this is where it becomes volatile, and this is where I have, and you can see I've labeled it here, A, B, C. This is a 3 month time frame around, okay, all the way into October. So this would be a volatile move. And you can see what I've done here. And this is the 200-day moving average. Does the market test that support level? We'll look at support levels, in the future, okay, and over the next few weeks, if we get this type of move to see, where support levels could be. But this would be a volatile move where it's still sideways off of the big move that we've had since April and May. Okay, but you can see it would be a volatile move. That would be great in terms of trading long options. All right. The other scenario is here in blue. 1, 2, 3. Right. So let's say regardless of what happens to the Fed, maybe there's more earnings. We get another pop into early August. Okay, I've mentioned to 10 Stock Trader subscribers, August 5th and 6th, and then August 12th and 13th are sticking out to me within this 2 week time frame as specific days or specific windows within this time frame that I believe are going to be important. All right. So again, maybe we pop into the first week or two of August with a new high. We see the RSI create divergence. We're already seeing the composite index, the CI, down here, and I'll show you right here. See how this is starting to slope down? And I'll highlight this for you so it's easier to see. But this is already starting to create a little bit of divergence here as we make new highs. So does the RSI do the same thing? Again, I'm not saying that we can certainly see new highs into August. All right. To me, and this is based off 20 plus years of experience, it's not worth, betting the farm, so to speak, on trading for those new highs. Okay, it's just not worth the risk because you can see divergence happen between sectors, between stocks. All right, let the market do what it's going to do into this time frame, and then look for setups on a volatile move. Now, the other situation is a non-volatile move, and it's just boring, it's choppy, and this is what's outlined here in blue. And you can see, unless we get a new high, whatever it might be, and then we have this wave five, maybe even into late August or early September, sometimes around Labor Day. Labor Day tends to be an important inflection point. I've marked that here, September 3rd, late August. Maybe we get that high, but then you can see with this ABC move, it's sideways, it's choppy, it's boring. Okay, kind of like we saw, for the rally, but and I mentioned this last week. We looked at these May time factors. We looked at June. Okay, we had war. We had the Fed. All these different things going on, and the market just ignored it. A couple days here and there that were down, but otherwise we rallied. Is that going to happen again on a larger time frame with this 3-month unit, this 3 months correction, this 3-month move into, as you can see here, I have October dates around October 8th and then later in the month, okay? And then we have another 5-wave move. That's what's important. So after this 5-wave move up, whether that is already complete or we get it into August, all right? And then we have a 3-wave move, that creates another leg higher, whether that's October, September, okay, then we get into 2026. I know we're getting a little bit ahead of ourselves, but this is what's important. This is why I think it's going to be important right now to be a little bit patient, see if we get this volatile move. If we get this volatile move in red, we're going to be trading aggressively. If we get this boring, choppy, sideways move in blue here, it's something that we can still trade, okay? I just don't think it's going to be worth using a lot of options to do it. So that's what I'm looking at in the stock market, all right? And let me also, you can see here I have down here this reversal hunt. What does that mean? I'm looking within this uptrend, especially if we get this in red, this volatile move, I'm looking for positive RSI and composite index reversals. What does that mean? I've covered this before. Let me cover it again now that we're live, okay? We have, 2 scenarios, at least that I see, as high probability setups. So if we have a situation, and you can see here that I've labeled, look at how the RSI held around, what is this? Around the 56 level, okay? So if we get into one of these dates and we have one of these corrections, like let's just take this A wave down into Labor Day, all right? Again, this is if that happens. It could be a high or low, you never know. But let's say we get that volatile move, all right? And we have price drop to this low, okay? But the RSI trades down to a new low, but it holds above one of these levels. So let's say this was back in late June. So I'll go here. Let's say we get price that doesn't break this low, but the RSI makes a new low below that. That's time to get aggressive. Now we could even see it with this very low volatile move in blue. That's great, okay? But you can see here and I don't generally like to have a lot of lines on my chart, but I'm explaining everything in detail so you can see exactly what I'm looking for over the next 3 months. All right, are we going to get this volatile move? Are we going to have a sideways move? If we get a volatile move, I'm looking for these reversals to trade options. Or if it's this sideways move, that's where you can build an ETF position, levered ETF position to take advantage of what I think is eventually, when this 3-wave move ends, we get another rally within this uptrend. So that's the stock market, okay? I'm going to take a look at gold as well. And this is a weekly chart. You can just see, and I've mentioned this plenty of times over the last couple of weeks, this is building up energy, okay? Now, the question becomes, does the correlation between gold and stocks continue, or does it break down? I outlined to 10 Stock Trader subscribers on Monday that we've seen a dollar rally over the last week or so, okay? If that continues, and maybe the Federal Reserve holds rates, the dollar rallies off of that. That would cause gold to drop. How far does it drop? Okay, is this a situation where we see gold come down into support levels, or does it hold within this range and then break out over this 3 month time frame as stocks work off overbought conditions? I think that's going to be very important. Okay, if it does break down, you can see here I also have the RSI. I'll be looking for reversals, positive RSI reversals on this as well. So, you know, it depending on what happens, you always have to look at the positive things, regardless of what's happening in the market, positive setups that you can look for. Okay. And I think that that's what's going to be very exciting. Even if the market isn't as exciting, I think we're going to have this 5-way move up, 3-way move sideways. Let's be patient and see what unfolds. But whether it's gold, whether it's stocks, I think there's going to be some setups that happen within this time frame, and that's going to lead into the end of the year for some great trading opportunities. Okay. Finally, we'll look at interest rates, and the Federal Reserve is going to go later today. I don't know what they're going to do. Estimates are for them to stay on hold. Now, what I find interesting is that if you go back to April, right, late March, early April, Liberation Day with the tariff situation, interest rates spiked with stocks. Well, what does that mean? It means that the bond market was anticipating growth, okay? It was anticipating that this is going to be good for the economy, investment's going to come in, okay? And now it's gone sideways. So what is going to happen with interest rates and the Fed and the tariff situation and inflation? We get PCE tomorrow, which is right after what the Federal Reserve is going to do today. PCE, the favorite indicator for the Federal Reserve, gauging how they are either being successful or not successful in their monetary policy. Is that going to, our tariff situation, is that going to come into effect and we see interest rates rise based off inflation, or is it based off growth? That's what the market, I think, is trying to gauge right now. You can see here, it's just gone sideways, interest rates. So the calls for the Federal Reserve to cut, I don't know if it's warranted or not. The market is going to tell us. And I think that's what's going to be important going forward, okay? Is the Federal Reserve making a mistake by leaving rates on hold, or are they doing the right thing? I think that's what we're going to find out. We just don't know what's happening with interest rates. So to me, it's not worth trading a whole lot in the bond market right now. But going back to the stock market, I think that's where the setups are going to be great. That and gold, okay? So these are the two scenarios that I'm focused on over the next really 3 months. Again, I've outlined the dates here that I think specifically are going to be important over this 3-month time frame. The question becomes, are we going to have a volatile move, or are we going to have a sideways, choppy, confusing price action? Either way, I think it warrants patience, but there is an end game. There is a light at the end of the tunnel, based on the rules of Elliott Wave, that we have after this 3-month, or it could be 3-month, 3-wave correction. That's when things start to pick up again. All right. So that's what I'm focused on over the next couple of weeks, next couple of months, in the stock market and gold, and we'll see what happens with interest rates today. I'm happy to take your questions. Let's take a look at Polaris. PII. Yeah, this is we get a lot of these stocks that just haven't kept up with the market, and you hear me talk about that a lot. And there's a reason for it. I like, as a technical trader, I like to see correlation with overall strength or weakness. And when I see a stock like this that has not kept pace, I just stay away from it. Now, it did trade above its 200-day moving average, but you can also see here on this new pop higher, it's starting to diverge on the RSI. It's starting to diverge on the composite index. Now, if this is a major low back here in April that did bottom with the market, and we continue to see a new trend, then that's great. But it didn't have to prove to me or to investors, at least technically, that it can continue with continued market strength. Would like your opinion on AT&T. Sure. Let's take a look. So this isn't a stock that I look at a lot. You know, some of these I call them utility stocks, but this has actually had a nice move off of an otherwise downtrend. So this could be something, and just off the naked eye here, starting. Let's see the Elliott wave move: 1, 2, 3, 4, 5, and then maybe we have a correction here like this. So this is something. Let's zoom in on this. This is something that you could see where this follows the market, okay, and we get this ABC move into, again, maybe October, and it keeps pace with the rest of the market, certainly. Does Elliott wave theory have any use for evaluating IPOs? It does, but the problem with IPOs is that you don't have enough price action history. So you need price action, you need the historical price action to determine whether you're going to have a trend or not. Now, you can use it on an intraday basis. You know, I talk about this a lot. The great thing about Elliott waves, you can use it on any time frame. But the problem with IPOs is that you're not going to have any price history. So yes, you can evaluate it, but you need that price action to do so. So as soon as it opens, it goes public. That's where you can start doing it. But until you have that price action, no, you can't. Could you look at Google? All right. I believe I highlighted this after earnings, and you can see this is when earnings it dropped. It's starting to rally back up, and from what I look at this, it's very similar to what I outlined in the overall market. But to me, this looks like a 1, 2, 3. Maybe this is a 4, and then we get this wave 5 into, again, those August dates. 5th and 6th next week, 12th and 13th possibly. Does it try to make a new high or does it not? Do we see this divergence with a big stock like Google that diverges from the overall sector it's in, Nasdaq? Okay, that's certainly a possibility. So I would look for, you can see the composite index is starting to slope down. If this gets into a new high, I would watch for divergence on the RSI and the composite index. Some really hot pharma stocks right now, but buying these companies always seems more like gambling than investing. Couldn't agree more. I 100% agree with you. I believe I covered this either last week or a couple weeks ago. Are there any sectors that you stay away from? I don't trade biotech. I don't trade pharma because of the binary nature of what happens. Yeah, you can get lucky and buy it where you have this drug, that drug that's approved by the FDA, but then this phase or that phase gets denied, or there's a lawsuit or whatever it might be. To me, I just don't like that risk to reward ratio of trading something that is that binary. So that's my thoughts on pharma and biotech, but I 100% agree with you. Okay, so we will. I believe I have one more question coming up, and then we'll wrap things up. Let's see what we got. Your feelings on the power of parallel channels. Yeah, so this is basically goes back to trend analysis. Okay, and you can I show you right here. If you do something like this, where you have the uptrend resistance and then you have downtrend, you can see here, right? So, and this is just a off the cuff type of example, but markets will have resistance here at the top, and then when its support breaks, you can see what happens. So there's definitely power in it. You just have to. What's your risk tolerance going to be? Okay. Now you could go back. Let's do a weekly chart, going back 10 years. Okay. And you can see how. Actually, let's go back even further. This is a good example way back after the financial crisis, where we had these long channels of support and resistance, and then you can see how it breaks down, but then also you find support at the 200-week moving average. So yeah, it should be part of your toolkit, but as I say all the time, there is no holy grail. You can't just look at one specific thing. You can't just look at Elliott wave. You can't just look at channels. You can't just look at moving averages. You have to incorporate all these different things into your analysis, into your strategy in order to be successful. One more. Let's see. What does silver chart look like? Silver has done very well, keeping pace with gold, catching up, if you will. Um, Now it still hasn't looked or still hasn't rallied above this 2011 high, but gold has. All right. Um, Here's the problem, not the problem, but this is where I'm looking. You know, I mentioned gold. Is it going to keep with this correlation with stocks? Um, my initial thought was that gold would rally as stocks correct, but given the dollar situation, a lot of investors are short the dollar. So if there's this dollar squeeze, which we've had, and looking at, dollars up 0.5%, which is actually a very big move in currency markets, okay? And, gold and silver are down a little bit. Silver's down over nearly 1.5%. So if I were to look at silver here, let's just do a quick Elliott wave analysis. Is this 1, 2, 3, 4, 5? Okay, let's even narrow this down, and we can do another sub count here. 1, 2, 3, 4, 5. Now we have this ABC correction. Yeah, that could be in the works. So are we going to see gold and stocks actually correlate together, where both gold, silver, and stocks correct, okay, over a 3-month period, and then we take off again? I think a lot of that is going to be due to the what happens with the Fed today. All right, and then there's what's going to happen in August. I think those are going to be the bigger time frames. So we're going to keep an eye on it. Again, this is why I think patience is so important. Let's see how the correlations stand out. Let's see how the time frames, the time factors that I mentioned, the window, this 2-week window in August. We have 5 waves up in stocks. It looks like we have 5 waves up in silver. Okay, bonds are going sideways. There's a short squeeze going on in the dollar. Let's see how it all takes shape, and then we'll look to act on volatility. All right, last one, TMO, and then we'll wrap things up. Thermo Fisher. Yeah, this is just one of those. It just hasn't kept pace with the market. And again, you hear me say that a lot, but this is just something that I don't want to touch. It's gone sideways since 2001 and the inflation. Okay, you can see back here. I was looking at this as we had this corrective move, we had a breakout, and then it hasn't broken above this high. So for me, and maybe you're invested in it or trading in it. You can see this short term gap up hasn't traded above its 200-day moving average. RSI historically is in overbought conditions for this stock. I would be cautious about this and not necessarily, again, bet the farm. Lots of questions. I appreciate that. And again, I think this is a time for patience. We'll see what happens with gold and silver. We'll see what happens with the stock market. We're going to get this volatile move. We're going to get this sideways choppy move. I outlined the dates. We're going to be tracking these dates. We're going to be tracking whether or not we get, choppiness or volatility. So right now, happy to be on the sidelines. Thank you for tuning in. Again, tell your friends, subscribe, like. And again, thank you for joining me, and we'll see you soon. Thank you.